Welcome to Magic Minutes by MGIC, mortgage industry training that helps you expand your knowledge and skills.
Today, I'll be talking about one of the important benefits of private mortgage insurance, cancellation. Once a borrower has built up sufficient equity in their home, private mortgage insurance, or PMI, can be canceled, which results in a lower monthly payment. Contrast this with the government's FHA mortgage insurance, where borrowers who make a down payment of 10% or less have to continue paying the MI premium over the life of the loan. The Homeowners Protection Act of 1998, referred to as HPA, or sometimes called the PMI Cancellation Act, provides conditions for canceling and terminating borrower-paid private MI. HPA applies to loans in first lien position secured by a single-family home that is the borrower's principal residence with borrower-paid MI. HPA does not apply to lender-paid MI, mortgages secured by investment properties or 2 to 4 unit properties, or for any loans that closed before July 29, 1999. It also does not apply to FHA loans. You will want to advise your borrowers to contact their loan servicer directly with any questions regarding those types of loans. Now, there are two main ways to cancel private MI under HPA: borrower requested and automatic. Let's dive deeper into these cancellation methods. Let's start with borrower requested cancellation. Per HPA, PMI cancellation can be requested by the borrower once 20% equity in the home has been achieved. This would mean the principal balance on the loan is at 80% of the home's original value. The borrower must provide their loan servicer with a written request for mortgage insurance cancellation. The lender must cancel the MI policy either on the date that the loan balance is scheduled to reach 80% of the original value based on the amortization schedule, regardless of the outstanding balance on the loan, or they can cancel on the date the mortgage balance actually reaches 80% of the original value based on the actual payments. The borrower must have an acceptable payment history and be current on their mortgage payments. There cannot be any subordinate liens, and evidence that the property value has not declined will need to be provided. Now, let's turn to automatic cancellation. If your borrower does not take any action to request the cancellation of PMI, HPA requires the loan servicer to automatically terminate the borrower's requirement to pay PMI on the date the mortgage balance is scheduled to reach 78% of the home's original value based on the original amortization schedule. Once again, the borrower must be current on the mortgage payments and have an acceptable payment history. At this point, you might be wondering, what about my borrowers who've made major improvements to their home or have experienced consistent home appreciation since moving into their home? Can cancellation be based on the current value of the home? While HPA does not cover cancellation based on a new appraised value, the good news is that most investors allow the borrower to initiate a PMI cancellation request with a current appraisal. It's important to check investor guidelines. However, both Fannie Mae and Freddie Mac allow canceling with a new appraisal as long as there is at least a 2-year seasoning. All of the other conditions, such as the borrower being current with their mortgage payments, having an acceptable payment history, and no subordinate liens on the property, will still apply. The GSEs require that the LTV based on a current appraisal be 75% or lower if less than 5 years have elapsed since the loan originally closed, or 80% LTV or lower if more than 5 years have elapsed since the loan originally closed. One last thing, your borrower may ask you if they will receive a refund of any unearned MI premiums if the coverage is canceled. This will really depend on the MI product and the premium plan that was selected. Borrowers should talk with their servicers about their specific situation. I hope now you have a better understanding of the basics of MI cancellation, and this will help you effectively communicate the facts with your borrowers so they can feel educated about the great benefit of BPMI. For further resources and information, please visit our website, mgic.com, contact your MGIC account representative, or reach out to our customer service department.
Thank you for joining us for Magic Minutes. We hope this brief tutorial has made a difference for you. For more how-to videos, visit mgic.com/training. Take a moment to review our legal disclaimer. MGIC is providing this as general information based on current industry guidelines at the time of this recording. It is always advised that you seek the guidance of your own compliance and regulatory departments.